Good morning, everyone. Let's take a look at these charts here. All right, so we have a bit of a misalignment, I would say, of these time frames, and we're at an inflection point. Not so sure which way it's going to go yet, and that makes it difficult. And we'll go through them here. We started earlier in the week with this, well, actually started at the end of last week. It wasn't apparent so much, but what I wrote in the weekend letter was, could this possibly be a bull trap? And that was last Friday's gap up at the retracement and rally back up to the high. And we found out early in the week that yes, it was. And down it went, and then the recovery. So this all could be part of a upward shakeout pattern in development. We just don't know yet. Yesterday was what I'd call a grinder kind of a day. It was just, you could see kind of as it went up. Well, that was early in the morning. You can see the timeline there. And then as the market opened, it was just a grind as it continued to move up. And then right at the end of the day, it looked like, there was that little spike where the momentum pushed up right at the close and then down it came. And then overnight, it kind of rebuilt this new support level again. And here we are at the top of what's now been a trading range since yesterday's high, which opens up the question, can it get through here? And if it can, well, it certainly opens up the door to at least some movement to the upside. I don't know if we can get back up to the top of this range here, but it's definitely a possibility. So we got this weekly where I guess it really wouldn't mean a whole heck of a lot, but what one of the comments yesterday was, when this was a red bar, was, hey, if this thing can turn into a bottoming tail bar and close at the high, maybe it could actually be a measured move higher. So it just don't know yet. So we into this choppy trading range. I guess we're going to have to see how this reacts, of course, to the top of the range here. I suspect there's going to be sellers. There always are. How many, we don't know. But you can see on the 5-minute chart where, the obvious place to the left, traders come in and sell it. Down here where it was down at support, buyers come in, now sellers come in. And the way it went up on the hourly, you can see different than before, where here it kind of crawled up over several hours, where here it spiked up. So clearly a stronger sign of demand and strength to push through there, which leads to, okay, if this can hold, let's just say, that should be a green one anyway, color coding things. If it can stay in the top half, which comes almost perfectly in alignment with what we call minor support, and above 2,800, that leads to a thought of, hey, let's take this long and see how far it'll go. Ultimately, testing that high raises, we're always questioning patterns as they're in development. So if this fails and goes down, well, then we're going to be looking at a measured move to the downside. Whereas if this rallies today, it's either maybe an M top, right? We'll have to see what happens up here, or it's going to continue higher to the 200. When you're in trading ranges like this, all you can do is trade the ranges and see which way it breaks one way or the other. And hopefully, you don't get caught in the middle of the range with some type of fake out. So it makes for a bit of a precarious trading environment. But intraday, we can handle whatever's going on here. And if it breaks out, we have to go with the long bias until that fails. And so again, the weeklies are in a situation where it would make sense for this to roll over. Another thing to take notice of here, we use moving averages and we call them visual aids because they're as subjective as anything else that you put on your chart besides prices. But notice how the 50 and the 20 are starting to converge and coming together. And that happens as prices consolidate. And this larger range, right, all of this here, which expanded the distance between those moving averages, and the prices now are coming into the same area, brings those moving averages to converge with each other. So, the indicator methodology people will have Bollinger Bands and all kinds of proprietary indicators to show you that this volatility is contracting and that there's some imminent thing coming. But in reality, look, simple moving averages can be your visual aid without having all of that hocus pocus on your chart, or just the realization that this was a big move and it's getting tighter, and it's getting tighter. It's likely that it's going to break one way or another, because in the real takeaway here is that where sellers were totally in control for the most part, the difference between buyers and sellers are getting more in agreement or into a tight battlefield, drawing the lines as to, well, I'm not backing off, and I'm not backing off, and this thing's going to go one way or another. So while you're in this trading range type of scenario, we say you better be nimble. Okay, so we always interpret things through the eyes of what's real, and that is price. But we like to lose moving averages, what I call a visual aid. Tony's asking me, intraday, see the reaction at support and relevel and then act. Well, sure, Tony, but you do that within the context of other concepts. I'm always saying in the room, look, one candlestick is one piece of information. It's not a reason to act. But as I explained here, the way this candlestick forms gives us information that says, hey, demand was a lot stronger. Whatever supply was there, they took it in like it was nothing, versus over here where it was a grind to the upside. So this is a power candle. Now it's power candle at resistance. What are they going to do? Well, if demand is still going to stay there, it's not going to retrace that much. Common sense says if it comes all the way back down to the low, it was a momentary strength that evaporated. So trading ranges are more difficult than is when we have, let's get in the line here, when we have a downtrend here and an upward trending move within that downtrend, and we have this inflection point that's coming about here. The higher time frame says lower, but we don't have confirmation of that yet. Makes it pretty difficult at this moment in time if you don't accept the situation that you're in. If you fight it and thinking, oh, something big's got to happen, and we don't have an event that supports that something big yet, you're going to get beat up. So look, if it can get through here, we have to believe it's going to try and go higher, right? Doesn't have a lot of room to go higher. I mean, intraday, yes, it does. If it goes below here, well, it's got room to come back down here. And if it comes back down here, well, that opens up the door to down here. So we're in information collection mode at the moment. That's why we have a lot of chart patterns and stocks that are moving sideways. What are the moving averages called? And is there a typical, very typical, Jay, and welcome to the room, new subscriber. They are on the daily chart, they are a 20, a 50, and a 200. Right? The blue is a 20. They're simple moving averages. The 50, simple, is the green, and the red, simple, is a 200. And I'll explain more about that as we spend more time in the room. I'll explain all moving averages and how to use them and so on. So let's continue here so I can get Dan on. So you just know, pre-market, we always go over the markets, but always add some education as to how to interpret what we're doing. And we always want people to understand how to do it, not just be told what to do. Right? So the Qs have been showing relative strength, and they continue to, but they're still up at the top of the range here, but a nice big bar. Now, notice how this has already tested this area here. So if it can get through here, similar situation, if it can get through here, right, it guides to a bias that it can move back up, right, up into the top of this range. So we've got a small trading range and a larger trading range, right? This was at the bottom of what created the bottom of the trading range when this didn't follow through lower. And here you had the 50 and the 200 here. So we're in this state of equilibrium, limbo, call it whatever you want. But we have to be nimble. We have intraday trading here. We have our guidelines, you know, as I said, clearing here suggests higher. Down below here is going to be a short. And by the end of the day tomorrow, we'll be interested to see where this weekly bar ends up the week. Right now it's incomplete. So as I always say in the room, you know, when we're looking at the daily chart and something looks amazing, hey, you know, I've said it even this week, it's only 10:30. You have no idea what that bar is going to look like at 4 o'clock. So, you know, be careful on what you place a trade on based on what a daily bar looks like at 10 and 10:30. I'm not sure what you're meaning by that, Paul. Pick up some property. Anyway, Dan will answer about Tesla, John, and YouTube the next couple of weeks. So same story here. Dow trading range, big green bar. You know how to interpret it now. Is it going to go up? Is it going to go down? Some selling at the top of the range here. We'll see which way it goes. If this ends the day up here, well, you still got resistance above. If it ends the day down here, look out below. Pretty simple. This one I've been saying all week. Right? As I look at this on the futures chart, I think, hey, that's kind of a bull flag kind of a pattern that suggests up. You know, as you can see, the lows are coming down, and the lows are up a little bit to flat, and the highs are coming down. And it's just another way of recognizing that the spring is being wound here. Right? Which way is it going to go? You know, there's a theory that as something reaches the end of the apex with this kind of a pattern, the greater the probability of a failure versus it happening, you know, somewhere over here where, you know, I don't know, I don't have the statistics to prove something like that, but I can remember reading it at some point. There's a lot of theories about these connecting the dots type of analyses. But look, if it clears this high, it suggests it's going up. And if it clears this low, it suggests it's going down. But as we look at the confluence of other markets coming together, we see that there's a bit of a difference here. So we'll keep eyes all over the place to see what's going on. Crazy current contract of oil. And as you go further out, as you all know, right, you can see that, you know, back to some type of normalcy, but oil came way down, and you go on another contract, it looks even more normal, I suppose, but a lot of crazy volatility going on there. Bonds up within the trading range, right? Last week at support, we were looking for it to hold. Now we're at resistance. And if this starts coming down, it's something you want to keep an eye on. You know, keep an eye on TLT to see if it starts coming down, or TBT if it's going up, interest rates. And if it just comes down, well, leads to a bias that this could go up. So into market, some information that could help guide us. Gold, you know, came down to support in a little trading range there. Silver, trying to make a hook over here. Look at transports, what they did yesterday. You know, doesn't look so good. And So, a lot of kind of neutral bias, flips from one day to another which way it's going to go. And that is what happens within trading ranges as things get tight while we wait for whatever the event is that gets this market to really move. So we'll see how it all unfolds. All yours, Dan.
All right, good morning, folks. Let's take a look at opens first real quick, and then there's a ton of gappers with earnings. Oh, and by the way, we're going to do MT Live next Wednesday on selling options on 0 DTE day. McGraw, do you know anything about that? APA, we're long, we're short puts and long stock. IWM, we have a bear call credit spread plus a put debit spread. McDonald's, we entered a put spread into the close yesterday. Hey, Derek, your drop down, please. Please explain. Yeah, no, I will, McGraw, but you gotta show up next Wednesday to MT Live. We'll tell you all about it. This was one of our earnings out of the money bear call credit spreads. So that's doing fine, and it's gapping down, which is fantastic in a strong market. Piton. I see. Yeah, because we make fun of McGraw FT. It's when he was out in California, and Alex and I were giving him grief saying, "Where were you this morning?" And he's like, "Oh, I was out in the fields." So I just took that little lead to say that he's a plantation owner, but he also has a Winnebago, and we make fun of him. Piton, we have a put spread, and that's it in the weekly options trader. ADP, we are short stock and we legged into a covered put. AFL, we're short stock. I wanted to leg into a covered put, but they were too spready. Hey, Bob. APA, as I mentioned, long stock. CNK, another long stock in the oil patch. LUV, we shorted the breakdown yesterday. And yeah, you got to be careful on these things that are so oversold that you don't get a breakdown failure. But it had, this what we call a bull sandwich, 2 big red bars engulfing the green bar. The sector still looks like heck. Jets just can't get off the mat here. It could be a bottoming pattern. It's this descending triangle, another classical pattern, but a descending triangle in a downtrend suggests lower prices because sellers are getting more aggressive by taking lower prices to get out. So that and the cruise ship sector is just not ready. Those are not ready. The restaurant business has been doing better, and we've had some nice trades there. In fact, DRI is on my long list, and that is an ascending triangle. See, it's the opposite of LUV. The pivot lows are getting higher. So if it breaks out through this resistance, and we have a price void above, so that looks good. We are in RRGB, little restaurant guy. And we're also in the marijuana patch, MJ, long stock, and Tilray. We've been making money through our covered call routine. And finally, Twitter, we bought into the close yesterday. Kind of a bull flag here, price void, gapping up, so that looks great. All right, that's all our opens. Let's look at some gappers here. Not earnings, but I saw that Disney got its debt downgraded. Sell setup on the weekly. It's underperforming the broader market. So this is a bear call credit spread. watch, McGraw, hint, hint. NAT, this was another little oil shipper that I was watching on the gap up day. And it's having a nice morning. Sting was the one I liked the pattern the best on this gap day, just because of the big old bottoming pattern, big price void. So that looked great. Oh, Shack was another restaurant that some people were trading yesterday, 5-minute high. CPA, this looks like a Corona looking stock. Gap's too big for me. Target, I don't know if this was earnings or something else, but a bearish gap down, breakout failure. That's a big gap. You know what, McGraw? This might be a condor for us. Look, we have out of the money support, out of the money resistance. Yeah, let's watch this for a condor. Let me put him in a little window. Target. And see, folks, I don't look at the gappers myself. I don't filter them. I go through all of them so you all can see my analysis, and I do it really quick, obviously. So $58. That's a mess. Look at all that mess to the left. So I just delete you. Pete, oh man, look, a move that came from one of you all, the 1, 2, 3. Look at that, the 1, 2, 3 gapping up. $7 here. We had yesterday, we talked about pro gaps. Look at that pro gap. This was in a nasty downtrend. Boom, gap up sideways, new uptrend. PXD, Zeke. I think we can find better. I mean, it's at these overlapping bars right here, but it's a bottoming pattern. Xerox. This looks like a dead animal. This looks like a short watch or a call spread, but a call spread for sure. WAB, kind of it's flattish. I don't know what to do with it. ZM. Yeah, we actually had a call spread on this, and I didn't like the afternoon strength, so I stopped this out. We were short the 162, 175s, and we covered half earlier in the day, and then the back half we got out at 50%, or actually we made 50% of max profit because that was a bullish gap yesterday. And if it got through these highs, then it's off to the races with red bar ignored. It's gapping right to the highs, 155 lows. So that is a 30-minute high candidate. I like it. Because then you got 2 red bars ignored. You got your pullback from this big move. We actually had it as a bullish trade on this reversal down here, the rising 50. We're traders, right? We'll trade long, we'll trade short, we'll trade long again. Yeah, put that on the list. UNP 154. Yeah, that's a bullish gap. Kind of a, bull flag consolidation. So this is definitely a put spread watch. So those are my 2 favorites so far. UNP, well, we got a few favorites. Okay, Tosco, you're right at resistance and you're doing nothing. I got no interest in you. Hershey, 138. Yeah, that's a nice gap down, definitely. Yep, that's perfect. Both for a day trade short to start, and call spread. Yep, that looks great. That's another tier 1. Yes. Yeah. Wow, this is good. We're getting tier 1s. Yesterday, I was frustrated. There were so many earnings, and I went through them, and they were all junk. $44. Yeah, I like your Hershey better, but yeah, that's a watch. Tal, I don't like the way you trade. You're gone. Shoe, I will come back to you. I can't tell. PHM, your trading range. You're gone. I can't tell where you're trading. Ori, we have others to watch. ON 1451. All right, this isn't bad. This is a symmetrical triangle. Look, you got declining, you know, not perfect, but you can see, and you got ascending lows. So that's a put spread watch, 30-minute high. I like that. Mortgage, it's doing nothing. It's a bottoming pattern. So you're gone, LUV. We talked about IVZ up and down to 870. There's no great pattern there. Hexel, yeah, Hexel is a short under yesterday's low. Looks good. Yeah, that's a descending triangle. Yeah, that's a textbook descending triangle. That's beautiful. There's been a lot of triangle patterns here in this recent consolidation. Maybe we'll have to do an MT live on that one day. We did one a couple months ago on flags. So it's what, you know, Steve Nissan, it's what they call classical technical analysis. Lilly earnings, pre-market, all over the place. LUV, we talked about already. Someone on Facebook's asking. That's also a descending triangle. We actually shorted it yesterday, and I said, I mean, on YouTube, I said, let's not, you know, got to be on the look. We got to be on the lookout for, you know, it not being a breakdown failure. So as a new position, I don't know. I'd wait, particularly, you know, with the market strength, but our short position is fine. Let me continue here. ITW, you know, it's sloshing around, but it has nice levels. So McGraw earnings, maybe a 150 put spread. Shop, I have no idea what you want to do with that. So you got to tell me. Yeah, those are messes, but they could be topping patterns for call spreads. UHS, yeah, Debbie. I would do it under the week's low, under 97.56. Yeah, under 97.50, sure. Yeah, give it a few extra pennies. Yeah, I like it.